Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, I'm going to discuss the good, the bad, and the ugly with regards to Senseionics earnings. And let's jump right into the video. So let's start off with the good. The CEO, Tim Goodnow, he started off with talking about the 180-day and the potential. And I just wanted to, if you listen to the earnings report, there's some positive things, and I'm going to point out the good and the bad and the ugly. So the good right away is that he did speak on the 180-day and how everything so far is progressively happening quickly and everything is positive with feedback from the FDA, and they still anticipate FDA approval before the end of this year. Now, they were asked specifically during the Q&A, is there any chance that it can get delayed or not happen this year? And he didn't answer. He stated that of course anything can happen, but so far their interactions, they really feel like they're on track to approve 180-day CGM sensor this year. Now, do they think that any of their earnings that they make towards the end of the year are going to come because of the 180-day? And he says he didn't anticipate, even if they got approved today, that they would be able to start monetizing it, and it would be more possibly in January or next year sometime, or maybe 30 to 45 days after they get FDA approval, they can start selling it. Another thing that I really like is they talked about the 365 and how they're already looking next year to start putting in for FDA paperwork so that they can start trying to get FDA approval for the 365-day CGM device, which is big. And he mentioned that their emphasis is going to be collaborating the machine. It's only going to have to be done once a week. So that means you prick yourself, you get some of the blood, you test the glucose level on that, and you compare it to what the machine is giving, and it should be the same or close. And as far as that, they do have one of the highest levels of accuracy with their machines. So that's a positive thing. They talked about changing the way that providers get paid for using their service, for using the CGM, and that they're able to get compensated for the procedure and actually giving them the CGM or giving the CGMs to the patient both at the same time. And that they want to work out like a consignment with providers to stock the sensor, so that way they don't have to order it. It could all be done the same day and kind of like charge them as use. So that's another positive thing. They talked about the 3 positive medical journal articles that were mentioned about the accuracy of their machine, which we spoke about in different videos. So one of the most positive things that I liked was the pilot program that they're proposing, where they'll partner up with a mobile healthcare company and kind of be able to tell a link and get with the patient and have them insert the sensor themselves. And that's something that they're starting to work on. That'll be really big. So some of the revenue issues that they had, they blamed it on COVID because it's a simple procedure and you have to go to the doctor's office. And this was a time when everything was getting shut down. So those were some of the positive things that I liked. They get into the numbers here, and they talked about their 3.5 million that they made compared to 0.8 million third quarter, which is good. Year-over-year growth. These numbers are extremely small. That's why this is, obviously it's a risky stock. They're not making much money, but they have some potential. So the bad that I didn't like, if we look at the last 3 months, their sales in the United States, only 604,000. Outside of the United States, 2.9 million. I looked at their last 3 previous quarterly reports to compare it. And last year they made $2.3 million outside of the United States. So that was an improvement, but they've made over 979,000 in the US. So that was a bit of a drop. And previously before that, they made 313 in the US and 2.5 outside. And the quarterly report before that, they made 1.1 million in the US and 3.8 million on the outside. So there was kind of a drop. And again, this can be chalked up to COVID, and that's kind of what they're going with. They're saying seasonality and COVID and Delta, that they weren't able to go out and sell their product as much as before and market it and have providers actually give it to their patients. So this is going to be a big uphill challenge trying to go up against the giants of Dexcom and Medtronic and Abbott. These are giants in CGM that have a strong foothold in the game. Another bad thing, and Well, as far as the ugly, this, for me, what I didn't like to see the most is that they're still diluting a lot of shares. When they started off, they had 177 million shares, and recently they're up to 581 million shares that they've had to dilute. So this is becoming an issue where they just keep diluting shares, they keep diluting shares, and that takes away from your percentage of ownership in the company. And obviously, there's some people that debate, okay, well, they're using it to reinvest in themselves, and that's fine, but it's been years now. They keep diluting every quarter. And we, as investors, we don't want to keep seeing this. So another good thing that we're seeing is every time I look at the short interest, it keeps dropping and dropping and dropping. So I'm wondering if people are anticipating that there is going to be a spike because of the FDA approval, and that's why people are selling off their shorts. Honestly, this is a glorified swing trade for me. I've been in this early. This is a lot longer swing trade than usual, but this is not what I would call a value investment. This is just a long swing trade. I've been in since under $2 and just anticipating this 180 days. It got delayed because of COVID, and they're very confident that it's going to happen this year. So I'm already up quite a bit, and I anticipate that with the 180 day, it'll go up even more. So that's a good sign that the short interest keeps dropping. And if we look at the chart, I was surprised because the earnings weren't as impressive as people were hoping, but it wasn't as bad too. I mean, there was a lot of analysts that were anticipating a little bit worse revenue. Their EPS was lower than expected, and that was a little bit of a disappointment. But it spiked from 374 to 428, then dropped all the way back down to 374. This could be, honestly, in my opinion, if there was a high short interest, this could be just shorts selling their position. Now, when you short a stock, you actually have to buy it to get out of your position, right? So when you short, you borrow shares from your provider, your broker, and you borrow those shares and sell them at a high price or whatever price the stock is at because you feel it's overvalued. And as the stock price drops, you now buy the shares to give those shares back to your broker. Now, obviously, when you cover your short position, you're buying stocks. And if a lot of people do that, it can send the stock price go on a spike. And that's what a short squeeze essentially is, just a lot of shorters trying to get out of their position. This is not by any means a short squeeze, but it could be a spike because, the earnings came out the best, but it wasn't the worst. And maybe the people that were shorting the stock were anticipating a bigger drop. And when they saw that after the earnings, there wasn't a huge drop, that they said, okay, let me get out of my position. And that's just my theory. So the good, the bad, and ugly, not too much to get into. It was, if you watched my previous video, I did mention that I don't think they're going to do great in earnings because they are very dependent on COVID and opening. If COVID comes back strong, they can't go out there and sell their product. While Dexcom, they still mail the product to your home and you put it on yourself. So I was very encouraged when they talked about partnering up with a mobile healthcare company to be able to provide that service and link up and walk someone through inserting the sensor on themselves. That is very, very optimistic. And that can really help them break through the COVID or not being able to sell during COVID issues. So overall, it wasn't as bad as I thought. I thought it was going to be a lot worse. I thought the revenue was going to come in a lot lower. Their EPS was less than expected by most analysts because the constant year-over-year growth that they had, they were expecting the same amount of growth, which they didn't get. So that's a little discouraging. But I think for a swing trade, being in this so long, I'm still in great position. This is still a strong swing trade for me. I'm still holding, and I anticipate that the FDA approval will happen the end of this year. If it doesn't, I'm going to be highly disappointed. But everything shows that they're moving towards that FDA approval, and everything seems positive so far. That was my video. Thank you for watching. Don't forget to subscribe, comment, and like, and see you on the next video.